All right. Good morning, everybody. So overnight, a little bit of news. The Biden administration is considering limiting the sale of different chips on a nation-by-nation basis, and that hit NVIDIA and then brought down uh, a lot of the other semiconductors. The China group didn't get the stimulus that it was looking for over the weekend, but there is another event at the end of the month which could provide the sort of economic stimulus that everybody was looking for. So with those China names getting whacked, it really ties in nice with just a good pullback anyways, because they did really get ahead of themselves really quick. US markets are basically flat. Europe down 0.5%. Asian markets basically flat. We're sitting here waiting on something good, and we really don't have much good. A lot of data out of Canada this morning, which will land the same time we get the Empire State Manufacturing, and then we're going to get some Fed speakers. There's a little bit of a disagreement on when we're going to get them, but we also have additional auctions too. I think I've seen somewhere that this Krugler was also going to be at the same time as Dally, but I've only seen it in one spot. Everywhere else, they seem to have it at 11:30 and then at 1 o'clock, which makes more sense, really. Then in the later part of the day, we're going to get the budget statement at 2 o'clock. So it's kind of one of those days where we're just going to get this drip, drip, drip of data, and most of it shouldn't be all that impactful. The thing is, we never quite know when it comes to these Fed speakers if they're going to say something out of turn or if they're going to be misrepresented in their statement, what the algos are going to do to the things that they say. It does matter where they're speaking as much as when they are speaking and whether or not it's going to be live, if there's going to be Q&A. For Dally, she's going to be at New York Stern School of Business doing a little Q&A and a lunch. And Krugler is going to be doing a webcast. So, whether or not that has a lot of impact or not, really just do they screw up, say something they shouldn't have said? We did get a little bit of news that moved oil on the consideration that Israel may not target uh, oil fields. It's interesting that they weren't willing to discuss anything about what they would or would not retaliate as a target package. And then their defense systems didn't catch that drone strike. And suddenly they're back to communicating and now offering to not hit key oil structures. Maybe that's just coincidence. Yeah, I'm positive that's what it is. Volume is at 62.5. That's within the normal range. Nothing really stands out there. There's no market maker move. implying that they're worried about something or hedging up in front of a big event. The halfback of yesterday lines up with the ADR low, so wouldn't be surprised if we do continue to fade, if we hit the ADR and overshoot into the halfback. If we break both of those, the put wall, 58.77, right below that. They just came out with the AM edition, so I'll get that shared into the chat for the Spot Gamma Founders Notes. It is worth noting the Asian session last night. If we turn off some of this, this is why if you're trading in the Globex, you kind of want to know the different trading sessions and the levels that they create. So this is the Asian low, the Asian session low. And once Europe opened, it broke down through that level and it was really fighting to get back through that level. Once it finally did, then it was using it as a support like a Busby. But it offers a little bit more insight on why we weren't able to come back up. And then once we were, why we could have perhaps anticipated a reaction on the backside once we faded back down into it. 59.11 cog line overhead. If we do make more attempts to the upside, that 59.11's got to be respected. Keep your eye on it. Round number 5,900 and then 58.92 below that. But the weekly VWAP is down there too. So we're back down through our own VWAP. If we break the Asian session low, we can focus on Europe's low. Break that, we get to the week's VWAP. ADR half, 58.85. Half back, 58.84. The full ADR, 58.57. And since there's a gap down here between the ADR half and the ADR full, it's worth marking the RTH low, 58.73. It's not perfect for like a halfway point between those two, but it does offer some structure down here, or even the RTH open and then the low of the regular trading session. You can also mark the half back of the Globex itself, 58.63. Or 64, it's close enough. Without that, if we're just focused on where we are with the ADR half, since we're basically flat this morning, we're not up or down by any real measure, then there's no edge towards one side or the other. It is worth noting, though, if we want to get an upside breakout and get to the upper ADRs, that yesterday's high is going to be the issue, tied in with our own Globex high. So that little zone there is what we're going to have to fight to get through. Which lines up, if we measure the VWAP distance from VWAP, like reciprocation, and we plot that to the upside, that puts us right at the zone level. We're still holding above the weekly floor pivot. We did not hit yesterday's floor pivot, the daily, and so far we haven't hit today's daily pivot. So this is an MDP. It's a missed daily pivot. It doesn't count for yesterday. It counts for today. If we go all day today without hitting the floor pivot, then we would have two MDPs in a row. Today's channel opening higher than yesterday's is considered bullish. Price opening above the pivot and the pivot channel is considered bullish. We've faded down and interacted with the channel a little bit, which seems to be holding for the moment, but it's on the table. And markets hit their pivot 80% of the time. So the expectation is that we would hit the pivot. We just haven't done that yet. And to be able to do that, we've got to break the roundie, solid level 5,900. The pivot channel is significantly wider than yesterday, and it's just wide overall. A wide channel implies that if we attempt a breakout, that the breakout won't stick, that it'll fail, and that we'll hold the range. Now, these channels don't make price do anything. It's more of a gauge on what we should expect for the day. We can see all the volume so far this week is where we are right now. We're at the point of control for the current week's profile, and we've got a classic P-shape profile at the moment. If we break the value area low at 58.91 cog line, it's very likely we're going to completely retrace into 58.32 cog line, which is the point of control from last week. That would put us all the way down there. I know it might seem like a lot, but there's really not a lot of help if we break this level and really start to head south. So a little bit of help at this high volume node. That's about all we got. We're still a considerable distance from the 10-day, the 20-day, 3-week. All those moving averages are below us. Zero gamma and volatility trigger are underneath the put wall. Hopefully they'll have some comments about that when we get the spot gamma index, which right now, looking at the PM edition, the spot gamma's gamma index was +2. This morning in the AM, it's +3. If you're not familiar with that spot gamma index, it goes from a -4 to a +4. That's the range. In a -4 environment, if we break out, we could really run. In a positive condition, the closer to the +4 we get, it's very unlikely that we break out. And if we do, the breakouts fail and we come back in again. Now, this is very similar to those channels that we were just talking about with the floor pivots. This gamma index isn't going to make price break out, and it won't hold price back if we do break out. It's more of a perception of what we should be expecting if price tries to break out. In a +3, which is it's a pretty heavy number. If 4 is max and we're at 3, then we're at 75% of the max. It's a strong consideration that if we break out, that the breakout fails. Now, that's really based on market maker and dealer hedging. The idea that when we're in a positive environment and we break out and try to run higher, they will sell into that breakout. And the more we rise, the more they'll sell. If we were in a negative gamma environment and we broke out, then they would buy into the buying or they would sell into the selling. So if we fell, they would sell more. If we rallied, they would buy more. So that's really the key difference. But that difference matters because since we are in the positive gamma environment, if we break out, for an example, like we did yesterday, we can go. Even with them selling into it, we can still go, right? Options aren't the only tool in the toolbox. They're not the only thing that moves markets. I know it's easy to overlook that sometimes when we really dial in and focus on options data and how influential that options market is to the broader market, but it's not the king all the time. Sometimes something else takes precedent. So that will be the base case argument for today. The upside is pretty easy. If breakouts are going to fail, then if we get a test of yesterday's high, we can use something like the 111, you know, the LZ, and the 123, the OCC. We can use those for liquidity zones, and we'll have a pretty good idea of where the reversal should happen. And it would be very likely that we just fall back in again. That would hold the range for the top side. The problem with holding the range is yesterday's low is all the way down at 58.50. So if we're talking about staying within the range, well, that's 60 points below us, give or take. So we could fall all the way down there and poke outside of it and then come back in again. And they would still say, yep, see, we held the range. Yeah, that's a really big range. $10-day, 30-minute volume profile. The point of control is now lined up with the point of control from the TPO. They're both at 57.50. It's a long ways off. We're building out new volume structures at our current level, but we're not expecting to see the point of control move anytime soon. Once it does, unless we build out more volume where we're at, it's expected to rise up into the 58.20 area. That would put it right up in here with this volume and that price. But that would only be after we lose a lot more of what's down here. And then by default, we would see it move up. The only reason that I think it would overshoot this is if we stay here and we build that volume out greater than that volume there. So when we look at what's underneath this and the considerations of could we have, you know, some significant moves to the downside, we could, but there's a lot of structure down there that can really help us out. Spot Gamma yesterday was talking about how after VIX expiration on Wednesday, we could see weakness in the markets Thursday and Friday and even into the election. And then depending on how the election goes, if it's an election that doesn't get called quickly, one side says they're going to contest it, then there's a bunch of arguments, maybe some recounting. You know, if that drags on for days and weeks, then we're likely to see more and more volatility and chop in the market. If it's over quickly, one side really dominates versus the other, and it's a clear win without a bunch of recounting and contesting, spot gamma suggests we could have one of those end of year rallies that kicks off pretty much as soon as the elections are done. So kind of keep the quote elections are done consideration in mind, with the idea that it may not be done as quickly as we think. If it's going to be contested and all of that, it could drag on for weeks. We're wrapped up pretty tight this morning. Got a classic D shape with the point of control having on the volume profile, the point of control about midway, but on the TPO, it's really right up against the top. It's where the greatest amount of trading took place versus where the greatest amount of volume took place. So it's likely we'll see these two reorganize themselves in a little bit, line up, get in sync. But it's a tight range. It fits with a really narrow IB or initial balance. The base case argument for today is that we hold the range from the central pivot channel that we were looking at with the floor pivot and the channel around it, and because of the spot gamma's gamma index. But that quote range is really wide. So sure, we're likely to hold the range, but it's a big dang range. We haven't reached the edge of the week, so we've got room to the upside if we want to do that. I think this daily bar really shows how wide the range is right now. We could travel anywhere inside that today and they would still say, yep, we held the range. So if you do want to tighten that range up some, you could focus on just the RTH first. Then if we get outside of the RTH, then you could focus on all of yesterday, the lower part included. 1.2% above the 10-day. We're still not overbought. And in fact, we're pulling back a little bit from the overbought, or from the idea that we could have been. We didn't even get that far. 1.5 is the sweet spot. It's where we would want to be. We made it that far. Pull back nice and gentle. This is where we would want to be, right? This is coasting. It's good. We're not overextended, overbought. It doesn't owe us any sort of pullback. No mean reversion logics or anything like that. And on the week, we're sitting at 3.25. If I put my mouse there, you can see we've been higher than this before. We're not overbought. We're not overextended. It doesn't owe us any sort of pullback. We didn't move too far yesterday, too fast. So it's just a normal day. We're still looking really good here. There's no risk showing. I mentioned at the start of this that the China group getting whacked a little bit. They just didn't get really good answers over the weekend. More promises than anything else, nothing concrete that came in. But at the end of the month, there's going to be this National People's Congress Standing Committee meeting. It's a really big deal, highly anticipated. It's supposed to address several key issues, potential economic stimulus measures, and fiscal policies. So if you're playing in the China ADRs, or you're wanting to play in those, BABA, Baidu, JD, PDD, NEO, for me, Copper, if you're in that space or wanting to get in there, keep your eye on the end of the month. If they disappoint at that one, then I think we'll retrace the whole China ADR move at that point. Energy down, but this is more of just deflation from fear than anything else. All right, they got pretty hyped up on the idea that there could be a lot more shortages if there is a reduction on oil and crude. Once Israel said they weren't going to put that in their target package, crude dropped substantially. It's still up quite a bit though on some of these like XLE, which is kind of generic, but it's down 2.5%. It's still up 1.8 over a 5-day period. Bitcoin taking a little bit of a pullback this morning. It was up close to 7%. It's still up 6% over a 5-day period, even though it's down, more than 0.75% this morning. Solar down as well. This is a continuing beat down. It was already down more than 3%. Add another 0.75% to that. Metals and mining, a little bit of a pullback, but it's been doing good. Gold miners, all of those have been doing good. It's just a little weak this morning. Airlines are up. It's a continuation that started a little bit yesterday. Financials up again this morning. They're up now over 3% on a 5-day period. Everything else is on wait. So we're looking at the S&P 100. How many names are up at least 0.5%? And in what space are they? So we can see finance, which makes sense. Banks are kicking off that earnings season. American Express, Bank of America, Citigroup. So major banks, brokers, investment managers, those are up this morning. Then specialty stores, retail trade, like Walmart, is a nice continuation. Software last week had a good move. Still seeing some of that. And Google's got an event this week. I think it's tomorrow. But we're seeing Google getting some moves in the pre-market. Boeing, after the beatdown that it's had, a little bit of a reflexive move in the other direction. And Apple's up a little bit. Semis are getting whacked pretty good. So China's down, semis are down. As a group, there's a lot of things that just aren't working out that good. Looking at the NASDAQ, names that are up at least 0.5%. 7. So, we've seen this yesterday too, where the S&P was up, had a lot of names up, but the NASDAQ wasn't. And then it flipped. The NASDAQ started to get flows. It had more names going up than down, and the S&P didn't. We got to get them in sync so they're not working against each other. Names that are down this morning, at least 0.5%. Some pushback on those manufacturing names like Caterpillar and Deere. Some health services, United Health, Johnson & Johnson, those kind of names. Energy and materials, ConocoPhillips, ExxonMobil, Chevron. The chip space, AMD, NVIDIA. Only 13 names out of 100 are down at least 0.5% in the S&P. And for the NASDAQ, 14 out of 100 are down at least 0.5%. There we've got more semiconductors, ASML, MU, NVIDIA, AMD. So when we focus on all of these as a group, crude is down, the China group is down, energy, Bitcoin, precious metals, and semiconductors, all of that, all those groups are down. So then when we flip it around and ask, well, what is up this morning? Airlines and financials and pot stocks. You don't want an S&P rally on pot stocks and airlines. So that's not sustainable. That goes to the idea that if we do break out, it likely doesn't stick. But on its own, not having the good stuff that give us a rally wouldn't necessarily give us a sell-off, right? We would need those things to actually get negative for us to start looking for reasons to really break down. So the Mag 7 names not being up can stop us from breaking out and really running. But as long as they're not going down, then there's no reason that we should just completely sell off either. This is a really easy way to see what is up in the NASDAQ 100 by market cap. The big box is the Mag 7. So you can see how big the boxes are on Apple, NVIDIA, Microsoft, Google, Amazon, Broadcom, Meta, Tesla. They just really stand out. Makes it easy to see how are the Mag 7 doing. Most of them aren't doing too bad. NVIDIA and Broadcom are negative, but the rest are either flat or up a little bit. So if we can change that, even just getting NVIDIA back to flat would give the markets a chance to try a breakout or a rally. Without the Mag 7 group giving us that lift, then we are going to need something like the options flows, get some 0-day rip, or, with the bond market being closed yesterday for holiday, maybe we see something out of treasuries today that really galvanizes the market and kicks it into gear, which then flips the options market and brings in the Mag 7. Or news, right? There's always that little asterisk that says news could do it. But it would have to be some pretty dang good news. Yeah. So otherwise, play what we got. There's our Globex session. VWAP and the halfback are in line. We could stay in that tiny little zone all day. It's not likely, I think we'll expand out of this, but that's the range right now. GTFO, get out of the box, and then we'll play whatever direction we get. Just keep in mind that if we do get that topside breakout, we've still got yesterday's high to contend with, and then we've got that liquidity zone up here that we've got to get through. That's what I got for you guys. Be careful, be safe. I'll see y'all tomorrow.